All right. Hello and good morning. My name is Jamie. I'm the Director of Marketing at Accelerate, and I will be moderating today's webinar. First, I want to thank everyone for joining us today and on this webinar on how to leverage data analytics to build a better contact strategy. Before passing the mic on to Josh to introduce himself, I wanted to cover a few housekeeping items. This webinar is being recorded, and a copy of the recording will be sent out following the session. Questions are always more than welcome. Feel free to drop them in the chat box, and we will cover them in the Q&A at the end. Josh today will be going over 3 types of data that will help you drive conversion in your contact strategy. But before we get started, I'll pass it off to Josh to do a quick introduction.
Hello, everyone. Thanks for taking your time. I know your time is valuable. Today, we're going to be going through really how to use data and how to use your CRM, and ultimately, how can we help you drive better conversions. Unfortunately, Paul Fannin wasn't able to make it. He had something emergency this morning, so I'll be handling some of his slides. But at the end of the day, what I would like you guys all to leave with is how can you take some actionable items and increase your conversions by at least 15, 20% or more? You know, what do you need to do? What data is available to do that? And ultimately in your CRM, how can you manage that and how do you ultimately get lift? With today's market, obviously we need to be ever more efficient than we have been as the market has contracted some. And making sure you're able to be as efficient and spend your time wisely is rather important. So first, a little background about myself. My name is Josh Granite. I've been in the mortgage industry for about 20 years. I've started half a dozen call centers. I've had some decent success. So like you, I've been a lender myself. We built this technology actually for our own need about 7 years ago. So I come to this with real best practices and insight, not just from my own experience, but from our clients' experience, but really with the knowledge of understanding what it's like to spend money in the marketing world and how to really maximize that and what specifically you can get to give lift. And we're going to give you a few key points towards the end of there's a handful of things that you could take into practice today, write down, and immediately give you guys a lift in production. So first, what we really want to talk about is, what does lead source data really tell you? There's a handful of things it can tell you. This is kind of the analytical side. In real time, you're able to look at things like phone numbers. How many times have you bought leads or gotten leads and you've dialed through them only to find out after the 5th call that it was the wrong number or a bad number, or maybe the person who did fill out the inquiry doesn't own a home or doesn't have good credit, or they own a home, but there's no equity in the home. So with good lead source data up front, you're able to, in that initial stage, find out and qualify what leads are ready to buy, what leads have their appropriate phone number, so you're able to connect with them. And that's important because what we like to talk about is what I say is loan officer shelf space. There's only so many people they could call in a day, only so many people you can talk to and communicate with. You want to make sure you have the right data so that when you're communicating and talking to those people, with those folks, that you're not wasting your time. And then lead source data post real-time data, what you can tell you is really, was it a good lead source? Did the borrowers have high intent? Or was it your loan officers who failed the strategy? What do I mean by that? Let's say you buy a couple thousand leads from a lead source over a month and you don't have really great conversions with them. You're able to, through lead source data, actually go back and find out, did those leads actually turn into loans for other lenders? So maybe they did. Maybe they turned in for other lenders, loans for other lenders at a high rate. So you were talking to the right people. You were right in front of the right people, but ultimately you just didn't have the right strategy on communicating with them and connecting with them. So being able to post close or after you buy a lead source, to go back and look at what was the actual performance of that those leads, not necessarily your performance, but the performance in the marketplace. That can help you understand if you're just not buying the right leads, or if you're buying the right leads, but you're just taking the wrong approach. And that's really going back down to, measuring the productivity of each lead sources. You don't want to just take a dart and blindly throw it at the dartboard. Is specifically how productive are you on the macro level, on the micro level, and then on the macro level, how productive are those lead sources for the overall marketplace? Again, understanding what lead sources work for you is really important, because you may be buying leads, you may be working leads that are actually very high convert and very high intent. However, you're not being successful with those leads because you don't understand how to approach those, and you're not employing the right communication strategy, or maybe not the right tools to get in contact with them, or the right messaging, or you don't have going to the right loan officer at the right time, do that. And really, that's what we talk about, is really how do you light a match on your best lead sources. Again, we're talking about loan officer self-space and efficiencies. Is once you understand what lead sources work best and perform the best, you want to then be able to use things like skill-based routing and make sure that those lead sources fit the right loan officer. A great example, and we all know this as lenders, you have loan officer A who, for whatever reason, does really good with a certain lead source. Maybe it's an FHA type of a loan borrower that typically comes to that lead source, or whatever it is, their perception of that lead source is that that's a great lead source. Then you have loan officer B who doesn't do so well with that same lead source, but does really well with a different lead source. And you want to make sure that you give the right lead to the right loan officer at the right time, and you want to use skill-based routing. So a way to rapidly increase your conversion is through skills-based routing. Is take a look at your loan officers, take a look at the lead sources that the leads that they've had, and not just lead sources, but also loan types inside those lead sources. Were they conventional borrowers? Were they FHA borrowers? Were they VA borrowers? Were they purchase borrowers? Whether the cash out transaction that they were looking for, with the rate and term, or again, a purchase. So you want to understand how each one of your loan officers performed by those lead sources and product type, just so that way you can distribute those leads correctly. So use a CRM like Accelerate that has skills-based routing. So the lead source comes in, it can understand what type of lead it is. Is it a VA cash out, the $300,000 loan amount? And we know that this group of loan officers has the highest conversion with that lead source. So we're going to make sure we offer that lead to those loan officers first, because we want to make sure that we get the highest conversion. So you can really rapidly increase your conversions by really specifically targeting lead sources based off of loan officer performance and routing the right lead. Really what we say is the right lead at the right time can really drastically increase your lead conversion. So that's just distribution. The other thing you want to make sure is that you have the right contact strategy around that lead source. So different lead sources perform differently. A LendingTree lead who has very high intent, and LendingTree has a great brand, you know that you have a certain communication strategy that will work at LendingTree, because those people do want to talk to you and they expect to get offers from multiple lenders. So they're looking for and wanting your call. You also want to match your email campaigns and drip and nurture campaigns specifically to match them as well. So if you're buying a LendingTree lead or a Low My Bills lead or leads from LeadPoint, wherever you're buying those leads from, you should have your messaging reference those lead sources, especially when you're talking about your larger brands like Zillow, LendingTree, Low My Bills, Bankrate, because that consumer knows that brand. They respond to that brand. So when you're automating, again, a CRM should do this for you, like Accelerate, where it can actually automate the email based off of the lead source. So the message is very specific to that lead source, saying something very simple like, hey, I know you applied to LendingTree recently and you did that so you can make sure you get the best offers and you can have multiple offers. We haven't spoken. We'd like to be able to tell you what we can offer you and help you save money. And, as banks compete, consumers win. So please give us a call. And you want to reference a LendingTree name in there, because that's going to drive that response, because they know that brand and they're going to respond to that brand. And likewise, other lead sources, you want to be able to manage it the same way. And then ultimately, you want to make sure that you have the right lead going to the right loan officer at the right time. So we've talked about, what you can do with lead source data to really maximize just the lead source at first. The next side of it is, what can we do with specific, let's say, collateral data and specific individual data. So I'll give you an example for collateral data. You can, in real time, when a lead comes over, look at things like title. So if a lead's coming in, you can match it up to see, is the name on the address that's being sent over, does that match what's in the title-based record? And if there's a different name, or maybe there's two people in title, you can have more intelligence to let your loan officers know, hey, there's a co-borrower. Make sure you ask about the co-borrower. Or you can do something to look at what kind of liens are on the property. So as you're transacting and talking to this consumer, you may find out, wow, there's a $300,000 tax lien or a mechanics lien for $50,000. You want your loan officer to know that up front, because we've all done this in the mortgage industry, where we sell a customer, we spend a lot of time, we take an application, we send disclosures, we get the paperwork back, we turn the loan into processing, they order services, they start the process, goes to the processor, they're doing their work, then all of a sudden you look in there and you find out that there's a lien on title. So all that work was done for a borrower who maybe cannot transact. At the end of the day, won't be able to buy from you. So again, going back to what we call shelf space for loan officers, you want to make sure your loan officers are talking to the right people at the right time, and they're not wasting their time and effort on going after a lead that can't work. Likewise, not just collateral data, you can also do real-time lead data that tells you phone numbers, making sure it's the right phone number, the right address. So again, being more informed up front, it also gives your loan officer more confidence. If they understand more about the consumer's property, you can have a more intelligent conversation and you build more rapport, because borrowers want to know that you're the lender that has the information and you're informed. And as you're informing them on specific stuff to them, they realize that this lender understands what I need, and more importantly, sounds like they know what they're doing. Because if they're asking these questions, they know this up front. That means this will be an easy and smooth process, and that makes a massive difference. And ultimately, you want to give yourself a lift. How can you make your loan officers more efficient and make sure they're calling the right people ultimately at the right time? Again, at the end of the day, it comes down to how can you get these little details to get a better conversion. So each piece of this is going to give you a lift, either from initial conversion, from contact conversion, to application conversion, to fund conversion, and also to LO efficiencies. What are they spending their time on, and what is most important to them? Another thing you're able to do with data is really build nurture campaigns that are very specific to your customer. In today's day and age with online marketing, email marketing, your ability to build a brand in front of your consumers or potential prospect has never been as powerful as it is today. Meaning, you have a hand raiser for whatever reason, they don't transact with you potentially. There's no reason why you give up on that person in the universe. That person can be someone you market to for the rest of your life and for their life. And as you build better insights about that consumer, give you an example, do they have a pool? Are they living in a condo or living in a house? Are they living in a rural area? Different bits and pieces about their specific situation can help you tailor relevant content. So that way, when you're doing a long-term drip nurture campaign to them, if you're giving them bits of information because you know they have a pool, or that you know they live in a rural area, or they live somewhere where it's winter versus a warm place like California or Florida that doesn't have a winter, you're able to have messaging that makes sense, right? So if you're emailing someone a message about how to winterize your house so that it's ready for the cold of winter, and you send it to someone who lives in Southern California, that's not going to resonate with them. But if you send that email specifically to someone who lives in Minnesota, hey, now there's some valuable content that you're going to be able to build this long-term relationship. And we all know this. We all can think about emails we get from people we maybe have never done business with, but they give us bits of information that actually are powerful and impactful to us. So one day when we're in the market and we're looking to transact, those are usually the people we're going to go do business with, because all on the way they've built this rapport and they build this long-term dialogue with us. And this is how you really get lift. And ultimately, it kind of goes down the line of people do business with people they like. And that is a general rule of thumb. We typically do business with people that we like and want to talk to. So if you can build that rapport with your customer through a long-term drip nurture campaign, and you're giving them specific valid data that meets their needs, they're going to feel rapport and they're going to be a connection. So they're much more apt to respond to you when they're looking to buy. So all this data is great, and it's very powerful and it's very impactful. But how do you turn this data, what we call this big data, into big action? And that's really what becomes impactful. So how do you build the right call strategy around this? How do you build the right email strategy around this? First, you need a platform that can help you do that, can automate this. So you can set it up. You don't have to manage it. So based off of the best contact strategy for this lead source, your system is managing that, and it's working correctly. And then ultimately, how do you give the loan officer the ability to make these tools, make it powerful for them? Loan officers I've had let's say the privilege of training thousands of loan officers in my career. And one of the things that I've learned through loan officers, there's usually a handful of reasons why someone's not succeeding. What I like to come down to is two things: it's effort or ability. It could be both, but typically it's one or the other. So effort is very simple to see. Are they putting in the effort? Are they making phone calls? Are they shaking hands? Are they working? Are they following up with their past borrowers? Are they putting in the effort to be successful? Right. So some loan officers don't put the effort in. So that's step one. And unfortunately, in my experience, if a loan officer doesn't put in the effort, those are usually the most difficult to work with because it's hard to train someone how to want to work hard. Conversely, you may have loan officers, and we all have them, that put in tons of effort. They're working so hard. They're very diligent. They show up on time. They're excited, but they're not being very effective because their ability is lacking. And usually that's because they aren't using any type of intelligence and to manage their day, meaning they're calling the wrong customers at the wrong time. They're following up with people who can't transact. The people who are raising their hand and are firmly in the market, they're not sending them the right message because they don't have the ability to manage their own pipeline. So that's where borrower intelligence and workflow automation come into play. So the system should have the intelligence to tell your loan officers how to manage their day. Your top 5% loan officers already have figured this out. That's generally the rule of thumb. They've got some system that works for them. But 95% of loan officers fundamentally struggle with this. Who should I call? When should I call them? And what should I say? So having a fully thought out communication strategy, the intelligence to do it, and then a CRM that can automate all this is where you get lift. So now your loan officers become super loan officers. They don't have to use their intelligence to figure out what to do next. The system can script it, manage it, and tell them what to do next. So they become extremely powerful and very impactful. And you can help identify those people who are ready to buy in the marketplace. Consumers could be looking online. I've been speaking to some of our technology providers recently, and some are doing very interesting things about following people's online search habits. So if they're online searching for homes to buy, they're able to come back and tell you, the lender, hey, this borrower is looking to buy a house online because they're going through all these websites online. Well, have a system that can take that information and turn it into big action. So have a system like Accelerate that will take that information and you can build and drive a workflow so that when someone's raising their hand and they're in the market, that you're in front of them. Because if you've done what we've spoken in the past, where you've built the communication strategy, so that you've given them some useful information, you've automated it so that it fits their journey. Then now that they're in the market, when you reach out to call them and contact them, they're going to respond to you because you've built a relationship with them. So identify who's ready to buy and get in front of them when they are ready to buy. And, I think we've all heard this before in the marketplace is timing is, typically everything. Being in front of someone at the right time is extremely important. I'll give you a few stats, something you can write down. MIT made a study. Now, a lot of lenders don't realize this, and we've actually done a study we've done for 5 years now. We reach out to 1,000 lenders online, the top 1,000 largest lenders online. We apply for a mortgage, and we see how long it takes for them to contact us back. If you want to see the study, we have them all on our website. You can download them. It's actually really great information. But what we have found is half of lenders never call leads back once they go online. And the majority of lenders call leads back. If they do call leads back, call them back within, I think, median response time is 12 hours. However, study after study has shown that when consumers go online, they really expect a call. They say they expect a call within 30 minutes. Studies have showed, MIT did a study that said if you call a lead within 5 minutes versus 30 minutes, you're 100 times more likely to get hold of them if you call them in 5 minutes versus 30 minutes. That's a massive difference. So understanding how timing is rather important. And then also being able to serve something up to your loan officer that when they're in the right time, they just raised their hand. They're on the market searching for a new property. They pulled their credit or they've just responded to you. Give someone an example of in the market. Here's the time to call them and here's why. Reach out to them. Some other best practices as far as what can really help you increase and rapidly increase and drive your conversion higher is just contact based off the borrower journey. So first off, you get a lead, you want to call them. Now, MIT said within 5 minutes. What we can tell you want to call them in less than 30 seconds. And some of you lenders are out there, you're listening to this and you know exactly what I'm talking about. We discuss this with lenders all the time. And some lenders say we are averaging 9 seconds for that first call. We want to try to get it to 7 seconds. And they're fighting for seconds. That is really where the market goes to. But ultimately, you need a system that can automatically make this happen for you. Another great place is what we call timing is everything. And this is a study we did last year. We took a look at 80,000 applications across our platform with all of our lenders. And we looked at what the close rates were based off of applications and disclosures. And what we found was on those applications, on average, once the disclosures were sent, 36% of those disclosures came back in and went into processing. That's the average of the 80,000 applications that were taken. However, and we looked at contact strategy about how did that conversion increase. What we found was that if you call that disclosure sent 1 time or 2 times, you stayed in that 36% range of conversion coming back in. However, when you called that lead 3 times in the first 24 hours that the disclosure was sent, again, that's after disclosure was sent, 3 calls from the loan officer in the first 24 hours, that conversion across 80,000 loans went to 79%. It over doubled the conversion just by contacting them and reaching out to them 3 times in 24 hours. So again, timing is everything. Having this data all put together, being able to serve up the right opportunity at the right time, and then having a system that can manage this for you, this is how you can increase conversions. And what's great is this doesn't have to be done manually. I know a lot of lenders out there have tried to do this through spreadsheets or through brute force of reminding loan officers what to do, when to do them. Have a system that can accelerate that. Actually, you set it up and it manages it all for you. From a lead source coming in, it routes to the right loan officer based off of conversions, to the right messaging and going out to this consumer. When this consumer raises their hand in the marketplace or when they're in the borrower journey, you can serve them up the right message, the right call strategy, the right workflow management at the right time so you can rapidly increase conversions. We see lenders all the time come onto our platform, increase conversions by 15, 20, 30%, and get massive lifts in productivity based off just using some borrower intelligence and using some automation and using big data to turn this into really what we like to call big action. And what's great in today's market with software as a service, this stuff is easy. You don't have to go recreate the wheel. This isn't difficult to manage. This isn't difficult to maintain. Really simple these days. You pretty much just sign in a contract and turn in a system on, and it works for you. So unfortunately, we missed out on some of Paul's insights today. But what we do want to do is go ahead and open this up for any questions.
Perfect. So if anyone has any questions, go ahead and hit them into the chat box on your screen. The first question that we have is, do you have any tips or best practices for training LOs on learning how to leverage this data in their conversations? For example, talk tracks or weekly meetings or some sort of mentorship program?
Yeah, I think what we have found is, how do you help the loan officers build rapport? Which is, some of the data would be, where do they live? We've gone as far as finding out what sports teams are in the area or the weather. So when the loan officers actually had an initial conversation, they can make a mention of, oh, wow, it looks like it's raining today, or it's sunny, or gee, those Royals are sure having a great spring baseball season. And it's a great way to build rapport. You can also take things, some of the data like when the house was built. So that conversation can go into effect. If it was a house that was built in the 60s, like in Southern California, the vast majority were built in the 60s. You can have the conversation that says, have you remodeled the house? How's the kitchen? Do you have a pool? How's your master bathroom? Is it what you're expecting? Because most borrowers want to remodel their house, especially if it's an older home. And if it's a brand new home, you're not going to have the same conversation because they've probably already upgraded the house. So having some bits of information so you can be more informed and sound more intelligent becomes very powerful.
Okay. Next question is, we started using SMS texting. What's your advice on using this channel correctly?
That's actually a really good question. So SMS is a great way to do one-on-one communication with your prospects. It's also a great way to do initial contact strategy or long-term follow-up. When I mean by long-term for a lead, let's call 4 to 6 weeks, because you don't have all the time in the world to text message based off of TCPA compliant laws. So from the initial contact, it can be a very simple text that says, you know, we're trying to reach you. When's a great time to talk? But what we have found is if you push out constant message to your prospects through text message, like, hey, we have great rates, give us a call. Those things don't tend to work because consumers do respond to text message. And it's the most read form of communication currently. And if you send things that are not specific to, I want to talk to you specifically, Jim, or whatever the name is, let's transact, the consumers wind up blocking that text message, and it becomes something it becomes an annoyance versus a convenience. We've also found that text messaging in the actual transaction, once you've made contact with the customer, is a great way for the loan officer to carry that conversation on a daily basis. So like in our platform, we have two-way text where you can actually have a true communication with your loan officer, borrower, realtor, processor, all in one platform. And it's great for compliance as well because it's all being managed and recorded.
All right. We have another question. Regarding tracking consumers who are actively shopping for homes, what third-party companies have you integrated with that do a great job accurately identifying who is in the market and actively home shopping?
That's a good question. There's quite a few vendors out there that do this, that look at people who are actively shopping in the marketplace. I'll give you, two that we have worked with, but the one that we worked most with is Sells Boomerang. They have that as well. They can give you active buying habits. I know iLeads is able to provide that data for you as well. I know there's, I'd have to look at our list of our clients, but people use people like Deluxe, which used to be Datamix. They use people like Red Bell as well. There's quite a few different providers out there. If you're interested in that, what I would say is talk to us and we can kind of point you in the right direction of what data is out there. Some vendors actually use MLS data. Some use what we call screen scraping, where they go out and they pull down data. Some aggregate a little bit of all the above. Some are just reselling somebody else's data. So understanding where they're getting the data and the pricing points and how fresh the data is. Is it a 24-hour update? Is it a weekly update? And where the data comes from does become very impactful.
Okay, great. Thank you. Looks like those are all the questions we have today. Thank you, everyone, for your time. I'll send out the recording in case you hopped on late or you had to hop off. Thanks, and have a great rest of your day and week.
Yes, thank you all.